Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So last video, we basically left off right before we dropped 500-ish bucks on nothing really. You can say, if you were short, congrats. You can say we were gonna topple, that's fine. Nothing I looked at showed that we were gonna do that. I take that long trade 10 times out of 10. And I was long 3,800 basically, and just was holding. So it is what it is. I shouldn't need to say this every time, but I realize there are people who don't see this video or know my trading style and know the trading scenarios. The stop losses for any edge-to-edge trade are always the bottom of the cloud and the Kijun. Clearly we got stopped out there. If you were trading this as an inverted head and shoulders, your stop loss was below the right shoulder or any of these lows, that's fine. So it's a trade that got stopped out. It is what it is. Shoot or shoot, baby, and sometimes that's the way the cookie crumbles. And so how do we look going forward? You can see we have a bearish TK cross with price below cloud. Normally that would be mega bear, mega bear. Therefore, if we do fall lower, I would not be surprised. However, because we are ranging so heavily from the 4,100 to 3,300 area, it's more difficult to trust the signals alone. This is the 12-hour, they should be good, so we'll see what happens. There's a pattern that I'll talk about a little later that we might bounce up from. Again, on the 6-hour, everything looked great for the first time since many months last year, mid last year. And again, your stop loss is the cloud and below the Kijun, that got hit. Okay, that's the cloud trade, so you're out of that. And right now, everything's bear. So that doesn't bode well for going up. This is the daily cloud levels. So these will be the levels I would expect when we eventually do turn bullish. Now we won't hit above 6,200 most likely, unless there's some fundamental news or like 6 months of consolidation at that level. But again, we haven't gotten lower lows. There's no divs on this because we haven't gotten lower lows. There's no bear div, no bull div, no nothing. Stoke is crossed up above 20. That's a decent sign. Eventually, 5K to 5,300 is the target when this breaks whatever horizontal it feels like breaking. You can see it's below the Tenkin. The C-clamp doesn't look as bad anymore, so that gives more credence for the down possibility. But overall, it's kind of a mess. There's no real signal on the high time frame that says one way or the other than just bear. So this is the potential pattern. Again, not an original idea by me, but people are seeing this. This is why I'm on Twitter, looking at everyone else's ideas. Diamond bottom potential. You can spot this pretty easy because it's generally a jumbly mess. We go down, we go up, we just traverse this wide range very quickly, and then we compress again. Based on how I drew this on this time frame on this chart, it looks like we're breaking up. We'll see. The targets would be the previous consolidation zone, the previous breakout zone, and then if we break above that, back to where we consolidated. Volume's descending-ish, so it's a decent sign that this pattern's real. We'll see what happens, but not super confident on it based on the trend signals, but the trend signals are based on the sidewaysness, so it's hard to read as a whole. Checking some random stuff that I look at every day. You can see BTC versus indices. This is gold up here. Gold to me has looked like a rising wedge versus ascending triangle. If this breaks down and indices break up, that should be very bullish for crypto. Indices have really been on a tear this past month. Netflix is up 50% from December lows. I mean, it's just been kind of crazy. We'll see if that can continue. Kind of unlikely, so that doesn't bode too well for crypto. In general, the top 10 haven't really done much. ETH has been kind of a rolling dumpster fire based on the hard fork shenanigans, but overall nothing's really moved too much here. It's just been lots of sideways chop. Tether and Bitfinex Premium, nothing crazy, no shenanigans. Tether's basically back at $1, and the Premium is basically where it's been for the past several months. Nothing too crazy there. CME contract, we have an expiration coming up January 25th, so between the 25th and the 28th, there should be some decent volatility If you look back on all these dates, you can see that we've been pretty volatile on the opening and closing settlement start dates, however you want to say that. So I'd expect something in here. Hard to say up or down. As we stand now, I think low time frames go up, but overall I think we just keep the march down. So if you're counter trading me, go long right now. This is the BitMEX leaderboard. Top 4 people are short. The 5th guy is long, and you can see he's lost quite a bit of profit the past week. This is real too, so this isn't made up data. It's pretty hefty loss right there. So pretty interesting overall. 65% short on the leaderboard right now. If we look at OI is mega long ETH, pretty long on Bitcoin. Again, I mentioned this last video, it doesn't bode well for going up, mainly because people aren't going to be getting long. People are already long, and if they're already long and price isn't moving up, then there isn't additional fuel to get us there. Also, shorts aren't closing as much because they're already pretty down relatively. They're low. They're almost to their lowest level in a couple months here on Bitcoin. So that again speaks to over the next month-ish, down more likely than up. We'll see what happens. The 3-day, this is the BLX. This is BraveNewCoin's curated index. Goes back to 2010. If you want to see this on TradingView, make sure you tweet at BraveNewCoin. Please add full capability for BLX. We also have an ELX, an Ethereum index curated. That's coming on TradingView very soon. And there's also a 3rd index coming of a coin that has an army. So I'll leave it at that. So I was looking at these 3-day 5200 crosses, and it appears as though we had this bearish cross. On the last bearish cross, it was basically the bottom, but we stayed sideways. I don't really know how to read this other than obviously it's bearish. That wasn't really a surprise considering we broke down from where we did as far as we did. The next mega bull signal would be this bull cross. You can see this crossed basically at the top of what ended up being the 300-day ascending triangle, leading us to the rest of the bull run. But prior to that, we broke up on the 50, and this also broke up on the daily cloud. So there's a few things to look at going forward when we're looking for bullish continuation. So I'd be looking for crossing the 50 on the 3-day, crossing the daily cloud, crossing the 200 on the daily. The cloud would be on the daily. And again, there's no divs or anything here. 3-day still crossed down. Has historically been pretty bearish if you look at all these. So it doesn't look too good. Again, more evidence for down. But in general, my 1,000-foot view of Bitcoin is just too much chop right now to really be confident. I mean, to have an inverted head and shoulders form and then fail is pretty bearish, much like it was up here. This inverted head and shoulders, shoulder, head, shoulder. When it failed here, we revisited lows. So not unlikely that we revisit lows here. Could get an Adam Eve. That'd be like a month-ish formation of a U-shaped price. We'll see what happens. You can see it didn't break the 50. We were looking at that last video as well. All right, so that's Bitcoin. Let's look at ETH. ETH, pretty much a giant mess chart-wise, just fundamentally. Not really seeing much. There's no pattern. There's no trend thing here. There's nothing really. There's no div. Volume's declining. Volume's generally still up from where it was during the consolidation periods. But overall, not really much to say. I mean, if it breaks 80, it's going to 50. If it breaks 100, it's going to 85. Not really much going on here. You can see it's below the cloud. It's got a bullish TK cross. So if it gets a bearish TK cross with price below cloud, that's a mega short, mega sell signal. The bullish target would be 169, 170 based on the flat Kumo here. But overall, there's nothing compelling that says go long, go short. It's just kind of a jumbled mess. But what you would be looking for is the bearish TK cross with price below cloud. So if it continues to hover sideways and drift downward, you're going to get that, and then very likely you're going to see 85 touch. But more so than Bitcoin, you could be getting the Adam Eve situation. So Adam left is what it's called right now, the V, and then the U would form over the next month probably. For crypto, the Adam Eves don't usually reach the very bottom. So if you're trying to be like maximal risk reward, I would have bids slightly above 85, so between 85 and 95. You'll see it like dip, and we don't usually get the spike down. I don't know why, we just usually don't. So 85 would be the buy, 169 would be the sell, depending on how you want to play this. Adam Eve, typically you buy the neckline breakout, which would also be the daily cloud breakout. Again, this is like a month out. This isn't any time soon. So you'd be buying 169 as opposed to selling 169, and your target would probably be 220, basically where the last consolidation cliffed off down. Again, that's a month out, a month or more, so just keep that in mind. 12-hour, you can see it traversed the cloud a few times here, and really hard to trade that, because you're looking at support resistance levels, and unless you're very quick to act, you're just going to get bulldozed. You can't really hold in any of this and make money because it's just flat. It's just a giant chop zone. It did go from the edge to edge-ish, so that's good, for cloud signal people like me. The rising wedge appeared to be real, like I mentioned last video, and it broke down very, very quickly within a day. Again, if we get a bearish TK cross with a bearish Kumo twist with price below cloud, that is not a long signal. That is a mega sell signal on the 12-hour. So that's something to watch for. And following up on the alts that I mentioned in the last video, very disconnected in general. So Tron is the most bullish. Obviously, it's above cloud. It's got this massive ranging up-ish thing on announcements and other baloney. LTC, again, traversed both sides of the cloud, but it's towards the bottom. Just a giant mess. No real trade signals here. Potential low time frame falling wedge, but nothing actionable for me. XRP, like I mentioned last video, just a mess. Still a mess. Potential low time frame diamond bottom, much like Bitcoin. EOS never hit the other edge of the cloud. Bearish TK cross below cloud. Just a bearish picture in general. When these edge-to-edge fail multiple times, to me that signals you just need to wait until all the signals are metrics are bullish on EOS. So in this case, I'd be waiting for Kumo breakout, bullish cloud, bullish TK cross, and lagging span above price above cloud. So that's a month or more out at this point. And lastly, on Stellar and Monero, I just wrote a Stellar article that's out today on BraveNewCoin, so check that out. Fundamental metrics on Stellar look really good for Stellar. Relatively, in the grand scheme of things, they're quite low as far as the daily transactional volume, average transaction volume, and value, rather, and the NVT, things like that. They look bad compared to everything else, but they look really good for Stellar. Price chart-wise, everything, again, just like everything else, got denied this time at the cloud. Everything just looks bearish here. This would be an edge-to-edge that I would take if we get a bullish TK cross with price in the cloud to 17, something like that. Monero got denied again, like EOS, on the edge-to-edge, so this to me would be a wait till we get everything sort of cooling off. Now if we go sideways for another month on all this stuff, very likely that we will see the possibility of a bullish Kumo breakout, but there's no hint of that currently. Alright, that's all for this one. Like, dislike, comment, share, subscribe. Let me know how much you hate me in the comments, because that seems to be the popular thing to do these days. And happy trading.